Welcome back to Imperial Wealth's Crypto Chronicle Podcast, where we're recording a history book of all the events that have happened in the cryptocurrency industry. We're going to be reporting to you on a weekly basis, so let's head live over to our team right now to discuss all things that have happened in cryptocurrency this week.
Hello and welcome back to another edition of the Crypto Chronicle Podcast. Obviously this week was slightly different where we had the Chronicle release on Tuesday, but today's recording of the podcast is the Thursday, the 1st of February. Taylor, to open us up for a new month of the crypto landscape.
Mate, it's an exciting time in Feb. I feel like January was obviously pretty good with ETFs and everything, but Feb's looking pretty promising. As much as there's been a pullback, it's kind of positive in that opinion.
Yeah, it's definitely heating up the market. I feel like there's a lot of positivity ahead, but whilst there's a bit of uncertainty. We've obviously got the halving 2 months away, which is obviously every 4 years cyclically the biggest event for the cryptocurrency industry. Yeah. And obviously the intriguing thing about it is it's come 2 months, 3 months after this ETF approval, which you'd probably say is the second biggest thing, like you said. So, it's an interesting time in the market as we approach down the line some ETH ETFs. I think we're seeing Hong Kong bring in some ETFs now. Mm-hmm. There's a number of different things happening in the market, but yes, it's heating up the good way, isn't it?
Oh, very much. I think that's sort of the positive way is that, we're getting ever closer to the halving, more action coming to light always sort of helps the market obviously become a little bit more rejuvenated and bring a bit more, traffic. Yeah,
definitely. I think maybe we should, on the next podcast, as a little exercise, research exercise, look at the Google analytics on cryptocurrency interest over time now, and then let's check back on it in 3 months.
Looked at this.
Yeah, well, I want to check back on it in 3 months, though, post-halving.
Oh, right, yeah.
And then let's compare the data, see just how much interest the halving does derive, because I think it'd be pretty interesting to look at, because obviously price action is the number one driver of FOMO and of getting people into this market. But anyway, let's kick off with what's been happening fundamentally in the market. There's been some further stuff around ETFs, which... Given this is the ETF podcast, we might as well rename it too. We'll go over that first. So the SEC has postponed our verdicts on Fidelity and BlackRock's Ethereum Spot ETFs to March and then to May. May's the final deadline. We know they always get dragged to the final deadline, like January was the final deadline of the Bitcoin ones. So really, this extended time frame just allows the SEC to consider, approving, disapproving, or, further proceedings. Where they want to take it to court and stuff. It's a bit of a hard read, this one, I think, because it's different to the Bitcoin one where they were forced into a corner with it because they lost the Grayscale case in which a judge said you literally have no reason under law to not make this into a spot ETF, their trust. But obviously Ethereum's a bit different. It doesn't have that court case in place, but it's got the additional strength of the Bitcoin one being accepted. Yeah. What's interesting, I think, here is obviously ETH being a security or not. SEC have not labelled it a security as such so far. People speculate that's because BlackRock's in bed with Coinbase is in bed with Vitalik, blah, 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 blah. Who knows, but it's surely going to be interesting, I think, price action-wise for ETH, because obviously we saw Bitcoin go from 20,000 to 40, kind of front-run the approval. Once it got approved, no one really cared.
50
Everyone was
to 100%,
buying it.
Yeah.
Everyone, because, you don't go, if you knew the ETF had a 95% of approval 2 months out, you're buying 2 months out. You're not buying on the approval date.
Yeah, exactly.
So it'll be interesting to see if we get to, March or even close to April to the halving, and that's a month out from there, and SEC's given the indication they're going to accept the Ether Spot ETF.
4K.
Yeah, and then is everyone going to start buying ETH at the halving? Is everyone going to start buying Bitcoin at the halving? You know what I mean? It makes a pretty interesting
use case,
Simon, if Simon listens from CoinStash, I know he has a very interesting opinion on it, and he sees very limited upside for Bitcoin from here. I don't want to misquote him, but even with the halving, and you see, more so he believes ETH is the play right now, given the fundamentals around it. I mean, if you go and just simply look at the price chart and you compare the two, they're very drastically different. ETH's just kind of been consolidating ever since kind of that ETH 2.0, hasn't it?
But that kind of signifies obviously how much that's flown into BTC. We've seen its dominance obviously go quite up, so that we could see a pretty decent, not necessarily reversal of that, but stagnation of that, whereas ETH just pumps it.
Yeah, I think you're just going to have to wait for the point in time in which Bitcoin dominance really starts to drop and ETH-BTC really starts to bottom, because what's happening is it like kind of bottoms and then ETH-BTC rockets and ETH rockets and then ETH gets sold off and then ETH-BTC comes back down. So it's
exactly. Yeah,
bit of to and fro, but there's interest there. Obviously, I think Eric Balchunas, the great man on Twitter that was doing all the predictions and all the news around the Bitcoin ETFs, gives it a 70% chance of approval by May at the moment, which is
70.
I'm undersure of his data inputs into.
Wow, 70's sort of low, isn't it?
Well, we've still got 3 months. It's sort of low, but
it's almost, in my opinion, it should be like a 90.
I guess I guess he just doesn't want to go on a limb 3 or 4 months out, do you?
Yeah, true. That's fair. You got to die on that hill.
Yeah. Quick 2 more things on the ETFs. So obviously, as I mentioned, the first Bitcoin ETF application was submitted to the Hong Kong SFC. This comes shortly, obviously, after the US SEC have approved a similar ETF. So Harvest, which is the company, Harvest Hong Kong, is the company trying to do it. They're aiming to launch it post-Chinese New Year. With other financial institutions expressing interest.
Right, imagine all the red envelopes going into Bitcoin.
Yeah. Well, funnily enough, now just to re-mention Simon again, and I posted this to our traders. You might have seen it in the Discord yesterday. To day traders, it was the graphic of post-Chinese New Year Bitcoin returns over the last decade, and got an average, I think, in the week 7 day on the 7th day after Chinese New Year, there's about an average of a 9% return.
Yeah, that's right. Yeah.
So, and they're launching they're submitting these applications after Chinese New Year. So who knows? Maybe this is the savior that Bitcoin kind of needs at these 42k lows, these 40k lows to rocket it past resistance, because more often than not, we're relying on the interest rate decisions and the liquidity and blah, blah, blah that exists in the US financial system. Well, hopefully China can inject some liquidity, some ETFs. And
fingers crossed we can say Happy New Year in Chinese next week after Bitcoin's done 10%.
Oh, for sure. I can learn that. I did study Chinese in middle school.
There we go.
Can't say I was the best listener. Won't go out on a limb here and trying to say too much, but I think Cal was in my class, funnily enough. I think we were just playing Counter-Strike on our laptops most of the time. So
CS was the guy I did that too.
Yeah, but ours was the old Counter-Strike Condition Zero. Yeah. Anyways, so the BlackRock Bitcoin ETF also has surpassed now $2 billion in assets. I think I wrote this article 2 days ago, so it could be anywhere in the realms of 2.1, 2.2, 2.3. I don't know. It's getting a bit crazy though. I think I read yesterday. So BlackRock holds over 52,000. I think in combination with Fidelity now hold over 100,000 Bitcoin. So what's that? 0.05% of the total supply. Yeah. So 1% is 200,000. 0.5%. Sorry, not 0%. Anyways, so it's funny to look at it like that. The important thing here to understand from everyone that's been kind of trying to wrap their head around the last few weeks and the outflows and the inflows is essentially what's been happening is Grayscale Trust, who's had all this Bitcoin and all these people that have been getting it at a discount for all these years, are now taking profit. They have the highest management fee, which means if you're to hold your Bitcoin in their ETF, you're paying a high management fee than as opposed to holding in BlackRock. So some people have been selling their ETF in Grayscale and moving over to BlackRock, so they don't have to pay as many fees. There's FTX in there that were liquidating all their Bitcoin that was held in the Grayscale Trust. So essentially GBTC, which is the ticker for Grayscale Bitcoin, has been getting dumped really heavily. But to kind of neutralize that, BlackRock, Fidelity, they've all been buying. So
it's matched buying. Almost.
Yeah. So the daily outflows isn't as much as the daily inflows, which is the positive thing to do, so to notice. But what makes it more interesting is then you're trying to wrap your head around why we're dumping, because the easy explanation would be, it's just Grayscale dumping and we've got more outflows than inflows, but we have more inflows and we're still dumping. So that's what traders need to wrap their head around. But quickly, we'll move on from the ETFs. I will quickly add that we spoke on Gary and the SEC having their SIM swap attack a few weeks ago, but that's what they've accustomed it to, is a SIM swap attack. It's kind of hilarious that still no 2FA on the SEC Twitter accounts.
The irony, isn't it?
Yeah. Very, very, very funny. I think you can go back a couple of podcasts and listen to us talk shit on that. But for those listeners of ours that hold a Trezor wallet, this is an important update. Do a lot of our clients hold on Trezors?
It's really hard to tell necessarily. A lot of them hold Ledger, or there's that new one that's come out. What's it called? Oh man, off the top of my head.
Anyways.
Yeah, sorry, not coming to me, but yeah, there's a percentage that do. It's not massive, but there's some. Yep.
But yeah, obviously for those that don't know, Trezor is a really popular, top 2 hardware wallet provider. They've acknowledged that there's been a huge surge in malicious emails, so people are getting fraudulent emails, prompting them to upgrade their network or risk losing their funds. But so obviously, users of Trezor are getting emails from a fake Trezor email and then giving over their details to their account or whatever it may be, or logging into a phishing website, and people are losing their money off their Trezor wallet. So please just be very careful if that is you. Don't lose your funds for no reason clicking a phishing email. You've been warned. So moving on now, just around the grounds more fundamentally in the institutional space is X has introduced a dedicated payments account. So obviously this has sparked a lot of speculation. We've spoken about this in the past, but obviously Elon's trying to make an everything app. The speculation here is when it becomes a payments app, is crypto gets introduced. A lot of people think it'll be Doge, given Elon only really cares about Doge, has been, a huge supporter of it in the past. And I think he's incorporated Dogecoin, for Tesla's merchandise and blah, 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 blah. But, it's hard to say. I think it's a bit of hopium and copium at the moment.
Yeah, literally, isn't
for Doge holders because, you're hanging out for the fact that happens, but you don't know with any certainty. And I feel like, it's not going to be at the forefront of his mind when he gets this going. But in saying that, the really huge thing that came out yesterday was crypto withdrawals are now possible on debit cards in 145 different countries, with Visa now integrating.
I was going to actually ask you about this because I haven't read this and I haven't looked into it. How does all this work? What does it mean?
So I think, a lot of it, I think Visa in the past have worked really closely with the Lightning Network,
Yeah, that's
I think.
correct. Yeah, yep.
So I think it's integrating that technology, obviously, with Visa. It's funny because, Lightning Network, you want to your argument there is like, it's like the competitor to Visa, right? Because you're trying to say, pay with crypto that's fast, that's cheap, that's cheaper than credit card fees. But in saying that, I think they've always been pretty heavily involved, and I think it's through Transact that they do it with. But yeah, I think essentially it just means that you're able to get it. So how with crypto.com, you're able to get a Visa.
That's what I was going to ask. Does that mean I'm going to be able to get a MetaMask card now? Sorry for the quake.
My bad.
Does that mean I'm going to be able to get like a MetaMask card on my phone where I'm able to just like almost Google Pay?
I think it will, because
that's mad.
I think you will, yeah. And funnily enough is that I was speaking to someone that's in Thailand and they've already got it. Like you can go with a Visa card, pay for your groceries with crypto, blah, blah, and they were like...
what exchange does it run through?
I didn't ask them specifically, but they were like kind of shocked that everyone else was so far behind with this, So maybe this Visa... 145 countries is a lot. How many are there? Like 160, 180 odd countries?
It's the majority.
So that's covering most of the planet.
You can do it in Australia, but it's only through crypto.com and CoinSpot. And that's kind of all that I've seen, unless there's others. Maybe, I don't know, eToro or something might do it, but it's pretty exciting that might become somewhat mainstream across, all providers soon, because I'm presuming that just means they've got a license for a Visa license. You know what I mean? They just got to get that.
Yeah, exactly. So as I said, it's through Transact that they've partnered with, and so it's crypto to fiat conversions via Visa Direct. So I think the thing that people obviously probably get...
It's a pretty complex mechanism.
Stiff to you is probably... I'm sure the fees aren't handsome to convert your crypto to... Well, let's see. Let's wait and see. I'm keen to see it actually in place.
When you think about it, like if they were smart, they'd make it really low, like a 0.5 or whatever, because the transaction volume is irrelevant. That's where you're going to grow. You know what I mean?
Yeah. Good point.
Interesting.
Good point. But yeah, I'm keen to see how the integration kind of enhances the accessibility for a lot of countries around Earth that may not otherwise have that kind of convenience.
Yeah,
and
exactly.
that might be a lot of third world countries where a lot of the retail and all people do hold a lot of crypto and they want to pay with it because their currency there is completely cooked.
Well, that's what I mean. When you're looking at those sorts of countries and you're wanting to hold, funds into your bank account, or when you want to sell off, it just diminishes. So it's a pretty useful term for sure.
Yeah, no, that's good.
Wait, hold on. Then brings the next topic. Does that make it taxable? There we go. Hey, there's the interesting one. How does that get taxed?
Well, your question is not a viable one to answer because it has 145 different jurisdictions.
I know. Well, exactly. So that means it's obviously going to be region specific. That's crazy. That's going to be so hard to work out.
So with Australia, it would be because you're converting an asset to cash, which is a capital gain. Yeah, I think they're going to have a lot of problems with this. But anyways, Quickly, Virginia State Senate introduced a bill. This is just kind of a good mining one that offered exemptions for mining activities and prevents discrimination against miners. You can go and read the details in the news article, but essentially it encourages cryptocurrency adoption in daily transactions by providing tax benefits to a lot of the miners over there in Virginia. So
benefits.
Yeah.
Does it outline specifics?
That's why I said go and read the article, because I'm not going to sit here outlining. No one in here mines in Virginia in the United States, so I don't think.
No, we don't.
No, so that's why I didn't want to crap on about it.
It's very interesting that they do that, like state specific.
Yeah. It's very strange, the states, because obviously they're states, but they're very states.
Yeah, right. Very different. Tax stuff is usually a federal thing. That's interesting.
Well, because it's like, you can be in LA or I can't remember where, and your income tax is completely stuffed, and then you go to Austin and you don't have income tax.
Yeah, exactly.
So it's just like wild that you can. Yeah. That's why everyone's moving to Austin. I think I saw Joe Rogan. No, who was it? Elon recently. He said he wants to take Tesla from Delaware to Austin because he's like, it's so stupid operating a business here, not in Austin.
Yep.
So, anyways, that's enough on the news side. I'll quickly run through some technical analysis. Obviously, the market's been quite choppy. I think the last time I spoke 2 weeks ago, I spoke about how most likely dip we would see is one to the CME gap and the range golden pocket, which was around 38,500, 39,000. We've since fantastically bounced pretty much to 43, 44,000 off hitting that gap, filling it and bouncing. And this has obviously come after a big 618 golden pocket rejection at 48.5, 49,000, whatever it was. I think if you go back in the chronicles, I might have talked about this and I showed the price cycles where this happens. I think it's an average of a negative 40, negative 50% rejection. My argument kind of is we've already had a negative 20% one. So if we've already put in the local bottom, I feel like the inflows from the ETF have kind of neutralized it. So whilst it could have been a negative 30, negative 40, we've had positives of billions of inflows from these ETFs. So, but yeah, you could really just say it was the result of a sell the news. As we spoke about before, people were buying Bitcoin 2, 3, 4 months. They didn't buy it on the day of the ETF getting approved. They sold it because they knew that that's when the idiots would buy, and they can fill their sell orders out pretty easily, and it'll get distributed. So,
and when you look at it as well from that metric, if you were buying Bitcoin over the last 12 to 18 months, it's doubled in value.
Yeah.
Some people just might be happy with that.
Well, I think so, because I think before cryptocurrency came along, a 10% gain was really good. So the 100%, the indexes average 4% per year. That's what boomers are earning per year that they're pretty stoked with. So
I know, mate. I literally had someone go
100's 25 times what a boomer would usually get in a given year. So,
mate, people talk about the 8% rises. It's good fun, those.
But in any case, the bounce has been good. We've obviously been rejecting from this kind of mid-range POC, which is a point of control. So a lot of supply has been distributed at about 44,000 at the moment. I'd say for all bullish purposes, if I want to be really bullish in the short to medium term, I would want to see a close above 44, 45,000. It means we can probably attack that 48, 50,000 region again as resistance and try and flip it to support. And if that is the case, it's really all guns blazing for me towards the, we've got the halving incoming. Rates are still remain the same. Stock markets are consolidating at all-time highs. The DXY is quite low. Made this comment before. It is very, very, very hard to be fundamentally bearish right now. And keynote is fundamentally, because fundamentally, as I said, we've just had an ETF approved. We've got the halving in 2 months. The stock markets are at ass. There's no real fundamental reason other than trying to be predictive with macroeconomics as to being bearish. So that's why long-term, I'm still bearish. So bullish over the next few months, because it's hard for me not to. In the meantime, short-term price action is different. As I said, we've had this rejection that doesn't look like it's quite over yet. I wouldn't be surprised if we did maybe one last dip into the 30s, it's hard for me to imagine us going below 35, as I've kind of got the data and news in today from the Fed's meeting with the thing. So they've made it, there's no cut, which is good. There's a 90% chance of a cut, I think, in May or June. So as things are looking, it's kind of hard for me to assess that Bitcoin would go below, I'll go out on a limb here, $35,000. For those listeners that read my thesis early in the week on the 32 to 34,000, that I will say has dramatically changed even since I wrote that. Still a viable chance for us to land, but I think that would be the absolute lowest I could see us going if we did. All in all, everything still looks bullish on high time frames, still got bullish market structure. We're still in 40,000s. I know it's very easy to wake up, isn't it, and see price go this morning from 44 to 42 and go, shit.
Oh, no.
And it's like, if 1 month ago, we were dancing on the tables that we saw 4 even in front of the number of Bitcoin. And I think we said this on a recent podcast as well. So perspective is that the best thing to happen this morning is you wouldn't have thought that January was a green month. It was great because we were in 40,000s in December and then we came through January, but we went up. But I think we
went back up again. Yeah.
So I think we, the day.
It was only 2 or 3%, wasn't it?
Oh yeah. But it's still green.
Still good.
Monthly candle. I think for December was, let's just say it closed at 41,000, and this morning's closed at 42,000. Whatever it was. So we've had 5 straight green months. So that's the perspective for you. It's very rare that you just get an asset that just churns through. And, we're not in a bull market as such. We're not in a secular bull market. So where liquidity is just absolutely pumping into it. But you'll see when that happens and what it looks like. But for the services side of things, we got a buy recently in for the Trading Academy on another micro cap that was on the Phantom network that I really like. Given what I've just explained about kind of one last big dip or remaining patient for the confirmation that we are going higher, I'm holding off, but the Trading Academy members will have a lot more buys coming up in the next few months as we approach the halving and then go past the halving in an alt season. Day traders crushing it at the moment, still learning heaps as the engagement in there has picked up heaps. Shout out to Danny Cross. Danny shredded a Phantom trade recently. Everyone's really, really starting to learn more and engage more in there. So it's great to have that community going. And I think that's really it for the technical side of things. Mining market.
Mate, touching on the trading stuff first, because I think it's relevant. And I've already spoken to, majority of my clients to a degree, but to put it into perspective, because a lot of miners are always saying, I'm not really sure if I got the time, et cetera, et cetera. The Trading Academy is designed for you.
Yeah.
All right. I'm going to put it into perspective right now. We've just hired another person to help work on the service side of that entire entity, because I don't think a lot of miners realize just how much potential that side has. The last bull run, it was doing 3,000%. Right, we've been buying coins for the past 18 to 24 months, and I'm pretty sure when I look back at it, there's only about 4 of them are in the red and only by a small margin. Everything else is in the hundreds, in the green. So you've been sleeping. It's time to get active. And
just on what Taylor said, I think a lot of people are thrown off sometimes by Trading Academy, and you think you've got to be online and you're buying and you're quickly selling at 48K and you're rebuying. It's a very HODL long-term mentality. The first coins that we bought for this cycle were in June of 2022. We're now in February of 2024. So members that have been with us for this cycle have now held these coins and not touched them for, let's call it 18 months, 20 months. Another advantage of that is when they do sell them this year or next year at the top of the market for a very big gain, they get the 50% capital gains discount because they've held them for longer than a year. A lot of people rock up and then you have all these tax issues because you're buying coins and you're selling them, but you're losing 50% to tax.
Exactly.
In any case, as I said, it's a very HODL mentality. It's me saying I'm buying this. You can decide whether you want to. You don't have to either. You might hate the coin that we suggest, that we're suggesting that we're buying. You don't have to buy it at all. And then it's literally as simple as going on CoinStash, Binance, Coinbase, your favorite exchange, putting your buy order in, holding it, and then just watching the price do it.
The way that I've explained it to a few clients is the way that I actually use to park money.
Yeah.
Because it's worthless sitting in my bank account doing nothing to do. I'm not saying put your whole savings, but stick in a portion of it, because at the end of the day, it's going to go up. If it goes down, it's rough, but it's pretty rare, I'll be honest, that happens. We've got a pretty decent strike rate. So it's a great way to park your investments, sit it there, use it for liquidity purposes, whatever it might be. But it's just worthwhile looking at, because once the market goes, I guarantee anybody who's not who's a miner is going to be calling me being like, oh, I need to find some altcoins to invest in. And it's like when, Phantom's going to be at $50. You've missed the boat, mate. So it's time to take it a bit more seriously if that's what you're looking to diversify into. And obviously increase your risk for obviously a small amount up front.
Exactly right. And whilst we're there, I will quickly touch on that. That is the very baseline. Like, that's what you should be doing and what we recommend you should be doing. And then for those more advanced users that have been holding a lot of these alts and a lot of these coins, okay, but there's actually more even you can do from that perspective if you do have the time, you are holding these coins. And that's when we can introduce you to DeFi or the DeFi course. And, rather than it just sitting in your MetaMask, you're providing it to a liquidity pool where you're earning, 20% APR in the year, and you're just passively earning, just like you are mining. Just like you are sitting on hold bag. And then obviously from there, there's day trading. And that's when, if you've got the time, you can be selling stuff on the fly every week, every month, blah, 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 blah. Anyways, enough from that. Mining, we've seen a bit of a difficulty drop.
Yeah, I'll keep a brief mining one. And that's mainly just because this was written a few days ago. And there's been a few changes, but at the same time, there's not a huge amount of updates. BTC did drop last fortnight. And its difficulty about 3%. It's not looking too flash. For the next one, it looks like it's going to jump up by about 6-7%, which, to be honest, is kind of expected with some of the S21s coming online for some of the bigger companies. So it's not necessarily unexpected. However, as we've said, people that are mining now, you're not necessarily looking at the next 12 months. You're looking at the next 4 or 5 years. So the strategy stays the same. An interesting comparison actually is I did with a client. I was looking at my account. S19 Pro, just 100 terahash, mining in March 2020. Was making $5 a day US profit.
Yeah.
Fast forward 12 months. The amount of Bitcoin it was mining per day was cut. It was actually a third less. So it was a huge drop.
Yeah.
Realistically, it actually went to making $25 US a day profit.
Yeah, right.
So the difficulty as well as obviously the drop, it's completely irrelevant. You're looking at that price increase.
Yeah.
So that's the most beneficial part. So
it should obviously be like the number one thing people should factor in over these coming months.
Yeah, exactly right. Which a lot of people don't. They just go, oh my God, I'm going to lose 50% of my revenue and vice versa. Not the case.
Because people need to understand it's not just, that's the beauty of the halving versus every other thing that exists in the world is it's not just a supply shock, it's a demand shock at the same time, all in one. So yes, the supply differs, but the demand shoots through the roof. So more than makes up for it. So,
but the supply is interesting. Will and I were talking about this the other day, and as much as last halving when you went through, the block rewards halved. The transaction rewards stay the same. This time the transaction rewards are going up. So we should see a bit of a equalization almost in that regard. I don't think it'll be 50%. I think it'll be 30%. So we'll see how that goes. In the sense of other networks, everything's actually remaining relatively stable. At the time of writing this, Casper was pretty much where it was. Difficulty hadn't jumped up a huge amount. It looked to be about 8-9%, which is just in correlation to its emission schedule. Price is about the same. Profitability almost identical, not too much less. It's still making the S3s are doing $100 a day, whatever it is. Everything else is relatively the same. Doge still seeing drop-offs in difficulty. This is a really hard one to figure out. I don't know whether it's less people mining on L7s, not quite sure. But that's really good for people who want them. Dash has seen a massive jump in difficulty by 56%, which then I looked this morning has come back down 56%. So it's either looking as though someone's testing out some new miners or just people hash shopping. So it just depends on what's going on. CKB's also got 11% drop in difficulty, which is good for anyone on a K7. Looking pretty healthy at the moment, so that's great if you're still on one. Best buys at the moment, which in all honesty we're about to sell out of. So it's a bit hard for me to say this now because it was on Tuesday, but you would have seen if you're a mining client, we are opening a new facility in Thailand. A little bit different for us being we haven't really done Asia for a long time, but we've got obviously some significant roots there with our current facility provider already. So it is great because it's 10 cents per kilowatt. So it's 2 cents cheaper than Europe. So pretty healthy gains for a miner in there. So we're doing S19Ks there. Still the best miner on the market at the moment. Half the price of S21s. Doesn't make sense to buy an S21 in all honesty. So that's kind of the best thing that's going on at the moment from a mining perspective. As always, if it's of interest, just obviously holler at your boy, but just reach out if there's any questions.
Yeah, thank you, Taylor, for that. So I think that'll wrap us up for today. I think, obviously, going into this weekend, stay safe. I think we've got a bit more choppy Bitcoin price action, I think, for this month. But we'll be back releasing these on a Tuesday from here on in. We've obviously just had a choppy January ourselves with a few people all over the place and getting back into it. But we're stoked to get back into it. As Taylor mentioned before, we've got a new salesperson on board on the crypto side, Max, that some of you might be getting an email from, a call from, or you might see in the Discord or community. If you do, introduce yourself. I'm sure you'll be running into Max at some point anyway. But thanks everyone for listening, and we'll catch you next week.
Yeah, see you next week, guys. Let me know if there's any questions, and we'll go from there.
Easy. Thank you.
Cheers.